This is episode 180 of Zen and the Art of Real Estate Investing with my guest, Tom Dunkel. Tom is the Chief Investment Officer of Belrose Storage Group, and he brings almost 30 years of real estate finance and investing experience. He manages the firm's financial underwriting, playing a critical role in creating win-win, one of my favorite words, deal structures that ensure achievable investor returns. Tom, welcome to the show.
Jonathan, hey, it's great to be with you and all your loyal listeners. Thanks for having me.
Yeah, I'm always excited to talk self-storage because I feel like it's actually closer to passive income than most other things. Let's start there. Why is self-storage more passive than your traditional investments that we hear a lot of other people talk about, just in comparison, and then we'll get to your background.
Sure, yeah. Well, self-storage is a great passive investment vehicle. We love it because obviously it's real estate, right? So it's secured by a hard asset, right? So it's not like my internet stocks in the early 2000s that literally went to ziro.
Yeah, but boy, they had potential.
They did have a ton of potential and big advertising and IR budget.
Yeah.
But anyway, we can get more of that later. But and then obviously it's a cash flowing business. We have customers that are paying to rent their units and keep their stuff there. So we have that cash flow coming in. And then of course, over time, self-storage, like other asset classes, tends to grow over time. So we get the security, we get the income, we get the growth. And those are three really great characteristics for a passive investment.
Yeah. And even as a GP in self-storage, I find that if you're looking at it just as an asset, of course it's easier because there's not actual tenants living there. You have tenants, but the tenants are just like memorabilia, boats, and that takes a little bit of the pressure off, don't you think, compared to multifamily?
Absolutely. As a recovering landlord myself, yes.
We all
I am very happy that my tenants are just, lifeless stuff. Although they do like to, some tenants do like to try to live in the units from time to time. We got all kinds of stories we can get into today, Jonathan. But yeah, for the most part, we have no tenants. And there's no toilets, there's no plumbing, right? So you're not getting those calls in the middle of the night or over the weekend or on a holiday. And it's just a great, pretty, I don't want to say easy, because of course every business has its own sets of challenges as this self-storage, but as compared to other classes of real estate, I'll take self-storage.
As you said before, like when it goes up $5 a month, you're not going to spend $400 to move your stuff to another. That's the power of self-storage. It's a business portal and it's still worth it. But I also see, before we get to your backstory, self-storage to me, I really consider to be recession-proof, and actually think it's probably like, it might go up during a recession because people are going to be downsizing. So and then when they're upsizing, everyone has too much junk. I mean, not everyone can be Marie Kondo, so they're just filling up their stuff. So have you seen that across the board with all of your investments, that no matter what the economy does, self-storage is one thing that's staying on? You're not even going to really be losing on the rates because they're all set up.
Sure. Yeah. I mean, look, when we had the crazy year last year, when interest rates went up 500 basis points, and, one of the big drivers of self-storage demand is residential real estate transactions. And so when the interest rates went up and the transaction level went down, that absolutely had an impact across the self-storage industry. So our occupancies were down and our rates were down in some places, but that was that doesn't happen, very, very frequently. And in fact, in our investor pitch deck, we have a chart in there that shows for the past 40 years, self-storage occupancy rates have gently meandered between like 80 and 90%.
Yeah.
And to your point, across those 40 years, we had booms, we had busts, we had crashes, we had pandemics, we had, everything in between, but self-storage occupancy remained very, very, very steady. And to your point, people need it when things are bad, because maybe they're selling a house, or there was a divorce, or, some kind of downsizing or dislocation or death, or, the D's, as we call them. And people need a place to put their stuff. And then in good times, consumers are buying more stuff that, they're buying the toys, they're buying the, the bikes and the fun weekend car and that sort of thing. And they will store those at self-storage facilities. So it does well in good times and bad.
And one thing I also wanted to mention that I think is like really, the difference between stocks and real estate, that is a huge advantage that is going to go into what I'm going to ask you next is insider trading is legal. Like it's actually the way that you do business in real estate is by insider trading. And as somebody who's been involved in the commercial sector with self-storage, where you're not going on Zillow to find a new facility, you know that insider trading is just building relationships, and it's all legal. It's how you do it. But where do most of your deals come from? They come from people that you already are in business with or have developed, and they say, oh, that's Belrose. Like they know what they're doing. This is going to be an easy close, right?
Right. Exactly. Yeah. Can you imagine like going to your stockbroker and saying, hey, I'm a really strong closer, so I want like a 20% discount on those Apple shares.
Yeah.
I want to buy. They would be, what?
Yeah.
They'd hang up on you if you could even get them on the phone.
Yeah.
But yeah, no, you're spot on. We're able to identify those relationships and those inefficiencies and take advantage of them for the benefit of our investors.
What, like demographically, where do you guys like to buy, and what types of facilities in terms of like high occupancy, low occupancy, depending if you're doing value add? It might be all, but that when I talk to people in self-storage, just always is, I think, the overriding theme. Everybody buys differently. What's your guys' buying strategy?
Sure. Yeah. Great question. Yeah. And you're right. There's different strokes for different folks out there, but generally speaking, we are, following the demographic trends of people, moving out of the Northeast and into the Southeast and the South. Right. So there's that kind of migration going on. And, another beautiful thing for, specific to storage is when you start getting south of like, Maryland, North Carolina, the ground is actually very sandy. And so because of that, you won't see basements when you start getting further south. So, and
I did 14 years in Florida, and I remember never had a basement.
Yeah, never had a basement, and it's too hot to go in your attic in Florida. So those people are looking for storage outside of the home. Yeah, and so we're looking at that. But as far as the types of facilities we're looking for, I kind of touched on a little bit earlier. So we're not in Baltimore. We're outside of Baltimore. We're not in Atlanta. We're outside Atlanta because when you get into those urban areas, Baltimore, Atlanta, Philly, whatever, that's where you're going to find the REITs, right? The real estate investment trusts.
Yeah.
Because they have the big, deep pockets, and that's where you're going to find the public storage, extra space.
Right. They look more like an Apple store, but you're like, that's not for me. I mean,
that's right. And so they're big players playing with big players, and that's fine. They can go do that. We're having the most success in kind of the secondary and tertiary markets outside of these major metros because we look for that path of progress.